We are already almost in November. Hey everyone, Joe Bladdock here, Canadian Mortgage Weekly. We are doing an interest rate announcement today featuring my guinea pig. And as you can see here, my awesome guinea pig is available today. She will be with us on today's interest rate announcement. It's going to be great. She's going to help us predict today's interest rate. And with that, that's a lot of dust there that she just kicked up. So with that, I wanted to get into some questions I want to ask you. Do you guys think that interest rates are going up today? Leave a comment in the comment section below. Would love to hear your thoughts. I'm starting a poll here on Canadian Mortgage Weekly on, let's see here. Where's my poll? Here on TikTok. I'm going to see how I can start this poll here today. Let's see here. Quick poll. And let's see if I can get that here. I'm trying to get the poll started. More. How do I start a poll? Did I not figure this out before? All right, guys. So we got the interest rate announcement today. We're here with my guinea pig. Her name is Interest Rate. Let me just bring her up for you today. I will show you guys her. And I'll just move this over so we can get an idea. See her a little bit. There she is there. Adjust the camera. There we are. So she's hanging out there. She's my guinea pig. She's my mascot on this channel. She's correctly predicted the interest rate announcements 3 out of 4 times. So I would say that's a pretty good record, wouldn't you guys say? And with today's interest rate announcement, it's no different. She's going to be predicting the interest rate announcement. She's either going to eat the lettuce, she's either going to eat the hay, or she's not going to eat it all. So with that, we're just going to get into that in just a moment. How you doing, interest rate? You ready to predict today's interest rates? All right. If you guys can say hi to interest rate today, she's ready to predict today's interest rate announcement. And the Bank of Canada will be announcing its interest rates in just a few moments here. In about 12 minutes, we'll have an update here on where interest rates are at. Okay, so getting into some of the data today with my guinea pig here. What's the data coming out of the news, for example? What are they saying is going to happen? Well, a lot of the news outlets are saying that interest rates are set to remain the same this interest rate announcement. However, it's hard to say because inflation did go up the month prior, but did not go up last month. It actually went down. So if I can just bring this up for you guys here. Inflation is down. Big news on that. Inflation did go down to 3.8% in Canada. And interest rates have been going up due to inflation. That's a really big part of it. And with inflation, the way it's been, it's really hard to say where it's going to be going because inflation has been 4% for August, 3.8% for September. So that's a 0.2% decrease. And the challenge, though, is that September is still much higher than the 3.3% we did see in July, and a lot higher compared to the 2.8% we saw in June of 2023. What do you think, interest rate? What do you think about inflation? I don't think she really has any comments about the inflation rate. She does not seem happy right now. about the inflation, but she has no comments about it. And what's happening with unemployment? I know I follow unemployment here to help us gather data on whether or not interest rates will be increasing or not. And if unemployment seems to go up, then there is upwards pressure on the Bank of Canada to lower interest rates. And if unemployment does go down, then there's pressure to raise interest rates. And looking at the unemployment for September, we see that there has been no change. So, good news there for unemployment. If you're looking for a job, there's no change. Let me just move this here because my viewers on Instagram are having a hard time seeing there. Okay. There we go. So if you're just joining me now, we got interest rate. She's my mascot here on Canadian Mortgage Weekly for the interest rate show. We are doing a live interest rate announcement. So far, we've covered that unemployment has not changed since last month in September. So what else is happening? Unemployment did go up for a few months in a row there. And when unemployment did go up, we did see that there was some comments about that by the Bank of Canada. But the Bank of Canada was saying things like, we really need to see unemployment take a sharp trajectory upward to be able to make any announcements with interest rates going down. And there's really no trajectory here on the unemployment. The amount that it did go down in the 2 months prior to September was very, very minimal. Okay, so what's the bond yield been up to? Because the bond yield does predict the fixed interest rates. All right, let's put you over here. There we go. So what's the bond yield been up to? And the bond yield does predict the fixed interest rates. And the bond yield in Canada, it's been over 4% for quite some time. And wow, what a crazy, crazy bond yield, because the bond yield did sharply go up in the month of September. We saw the bond yield go up about 25 basis points in September. It did peak in the end of September, beginning of October there at 4.415%. And interest rates did go up on the fixed side quite substantially. Now, since then, it has changed its trajectory slightly towards going down, however, very, very slightly. And we've seen the bond yield go down from that high point of 4.415% to currently sitting at 4.247%. So that's about 18 basis points lower. However, still a very high bond yield compared to historical numbers that we've seen in the past year. The lowest bond yield we've seen was 2.766 in the early quarter one of this year. And with that, rates were a lot lower. So the banks usually have an interest rate that is approximately 1.5% to 2% higher than the bond yield for that term. And with that, right now, we are seeing the bond yield at 4.24%. So banks are sitting at around 2% higher, so about 6.24%. With insured mortgages, about 1.5% higher, and those insured mortgages are sitting at 5.75%. So if you guys are looking to lock in, the bond yield is a good metric to follow. And as I mentioned, since our last rate announcement, we have seen an increase of the bond yield. So that makes me think that perhaps the Bank of Canada will have upwards pressure from the bond yield to raise interest rates, but no pressure from employment to raise interest rates. All right, so inflation is up since the summer, but down since September. So again, that is a very muted stat, with my predictions being that they are really not going to use that to raise or lower interest rates. What do you think, interest rate? Again, if you're just joining me, this is my guinea pig. Her name is Interest Rate, and she's going to help me predict today's interest rate announcement. And as I mentioned earlier in this video, she has correctly predicted 3 out of the 4 last rate announcements that she's been on with me. So hopefully she's going to maintain her batting average of 750 going into today's episode. What's the CDOR rate sitting at? The CDOR rate is sitting at 5.59%. So that is quite a step up compared to the last rate announcement. And the CDOR rate specifically gives us an idea if the variable rate is a competitive option in today's market, which right now, based on the CDOR rate being a 5.59% and prime rate currently sitting at 7.20%, with the variance being less than 2%, the actual competitiveness of today's variable rate is low. You want that variance to be more than 2%. Okay, interest rate, we are almost there. Do you think the Bank of Canada is going to raise interest rates? We will have a live announcement in 4 more minutes here on Canadian Mortgage Weekly as we are getting ready to announce Bank of Canada's interest rate announcement. I'll just make sure that I have that ready for you all so you guys will hear it first on Canadian Mortgage Weekly. So what else do I like to cover off here before we go into today's rate announcement? Well, articles, what have they been saying in the news? The news is widely expecting that the Bank of Canada will hold interest rates steady today, and that will mean that the prime rate of 7.2% will not change. And with that, that's a good thing for most variable rate holders because they won't see their variable rate mortgages go up anymore. However, if you're really hoping for rates to go down, you're not going to benefit at all. So that's unfortunate. But let's take a look more at the what clients are saying. And clients, to me, have been saying, you know what, Joe, I want to lock in for 5 years. We want to have the security of being able to not see any rate increases on our mortgage. We don't want to have to renew next year or the year after at higher interest rates. And we're willing to take that bet to lock in for now. And a lot of people are saying that. There are a few people that are betting variable still, though. And those folks are thinking that these rates are going to go down probably in the next 2 years. So locking in for 5 really doesn't make sense. They want to do a variable and experience rate decreases on the year 3, 4, and 5. So when was the last time we've had a rate increase? Well, we did have a rate increase earlier this year. We saw a rate increase in the summer. And then we saw the biggest rate increase in July of 22nd, 2022. That rate increase was 100 basis points. Last time there was a rate decrease was way back in March of 2020. And last time there was a pause was this fall. So what do you guys think is going to happen today? Do you guys think that we'll see rates go up today, rates go down today, or rates stay the same? And just as we're getting ready for that, let's see what my mascot interest rate is going to pick. So we got the lettuce here and we got the hay. Let's see what she picks. Is she going to eat or is she not going to eat? Let's just take a look. So if rates go up, she's going to eat the hay. If rates go down, she's not going to eat. And if rates stay the same, she's going to eat the lettuce. Let's see what happens. So we have a rate announcement here. It's going to be live in about 1 minute here on Canadian Mortgage Weekly. If you have a variable rate mortgage, if rates do go up today, you will see a letter come from a financial institution showing you that rates have gone up and your payments going up. And if your rates go down, then we will not see a rate increase on your mortgage payments, but instead you will see a decrease of your mortgage payments. All right, so we have here the announcement. We have the news. Bank of Canada has released it. Bank of Canada, guess what? Maintains policy rate and continues quantitative tightening. So just from the headline, what are we reading here? That means that rates are staying the same, everyone. There's no increase today. There is no increase on mortgage rates today. Prime rate is staying at 7.2%. And look at that. We have my guinea pig interest rate staying put, not eating the lettuce, not eating the hay. I forgot what I said, but I think she predicted it correctly. I think if she didn't eat anything, nothing was going to happen. So that's great. If I can say so myself, that means she's gotten the last 4 out of 5 rate announcements correctly. Way to go, interest rate. All right. And what does this mean here? If we can just dive into this monetary policy report here together on Canadian Mortgage Weekly here, we see that the Bank of Canada did hold its target rate of 5%, and that means it's holding prime rate currently sitting at 7.2%. I can't believe how high prime rate is. Let me just give you here a better view of my guinea pig. As you see, she's not eating the lettuce. She's not eating the hay. So she's predicting no change. I mean, she's usually pretty hungry. You want to eat anything? Some hay? Some good hay? All right. Well, good job, interest rate. You did a good job today. So the global economy is slowing and growth is forecast to moderate further as past increases in policy rates and the recent surge in global bond yields weigh on demand. The bank projects global GDP growth of 2.9% this year, 2.3% in 2024, and 2.6% in 2025. So that's very moderate growth. It's in line with where the Bank of Canada likes to see growth for the GDP. They don't like it too high, and they obviously don't like it being in the negative. So Bank of Canada has also made the comments, while this global growth outlook is little changed from the July monetary policy report, the composition has shifted. So it looks like they are mentioning that the US economy is proving stronger and economic activity in China weaker than expected. So that's interesting because China's been quite strong in its economic growth, and the US has also been quite strong, but now China's going weaker, US is going stronger. All right, growth in the euro has slowed further as well. All right, she's eating lettuce now. Well, that doesn't count because we've already seen the interest rates stay the same here, everyone. If you're just joining me here today, interest rates have not gone up. The Bank of Canada maintains rates today where they are at. All right. Let's see. So, what do you guys think? Let me know in the comments. Looks like average growth in Canada has been 1% over the past year, and it's expected to be weak for the next year before increasing in 24 through 25. The near-term weakness in growth reflects both the broadening impact of past increases in interest rates and slower foreign demand. Great news. So Bank of Canada is going on record saying that past rate increases have been doing their job, and that's similar to the commentary that we saw last rate announcement in September, where the Bank of Canada did mention that they are going to keep rates high and use that as a way to battle the inflation that we currently see in the market. And actually, we see that happen. In September, we did see inflation go up to 4%, and then my apologies. In August, we saw inflation go up to 4%, and then in September, we saw inflation go back down to 3.8%. Still higher than July's inflation and higher than June's inflation, but lower than August's inflation. As mentioning here in the monetary policy report, CPI inflation has been volatile in recent months, 2.8% in June, like I mentioned, 4% in August, and 3.8% in September. Higher interest rates are moderating inflation in many goods people buy. So we've actually seen this. I've heard on the radio from many sources now that food inflation, as much as it's been super gangbusters lately, we're not going to see food go back down, but the rate in which prices have been increasing and food has been shrinking, we've seen shrinkflation as well, has been slowing down. So the food has gone up quite considerably. It's now really expensive. We're not seeing food prices come back down, but we are seeing food prices stay high and stay where they are at and not increase any further, meaning that inflation on food is slowing down. We would actually have to see deflation for the food prices to come back down. And the Bank of Canada's goal is not deflation at all. It's to maintain at 2%. So the Bank of Canada is okay with keeping food prices where they are at and allowing only a 2% increase. And they want to maintain that 2% target rate into the future. So they are mentioning, however, in addition to elevated mortgage interest costs, inflation in rent and other housing costs remains high. Near-term inflation expectations and corporate pricing behavior are normalizing, but only gradually. And wages are still growing around 4 to 5%. All right. Banks' preferred measures of core inflation show little downward momentum. So there is downward momentum, but very, very, very small. Okay. Looks like they are predicting in October that inflation will average at around 3.8%. Sorry, 3.5%, which, we'll see at the beginning to middle of November. Those numbers will come out. So they are predicting a drop of inflation from 3.8% to 3.5%, and then easing into the 2% range in 2025. Now, Benjamin Tall did come to Mortgage Professionals Canada on the weekend to discuss inflation, whether or not interest rates are coming down in the next few years or not. And Benjamin Tall did say inflation could remain high and that interest rates he sees will come down in the next 2 years. So that would take us from 2023 to 2025. And that is on par with the Bank of Canada's announcement today saying that they see inflation hitting 2% in 2025. And with that, if inflation does hit 2% in 2025, we could see a nominal, very small reduction in interest rates in 2025 from the current prime rate of 7.2%. So what does this mean exactly? Does this mean that we are going to have higher interest rates now for the next foreseeable future? Well, it does look like that. It looks like interest rates will be high and will remain high probably until at least 2025 before we see any adjustment downward. Will rates go up, though, between here and 2025? I mean, they could, but it's hard. It's really hard to guess that. My perspective now is that the Bank of Canada's increases in interest rates have been working. They've been doing their job. And we have seen a lot of interest rates, a lot of inflation numbers reflect that. Each month, it seems like inflation is either heading down or slightly going back up, but then heading down again. So with that specifically, what do you guys think? Do you think rates will come down 2025, 2026, or will we see rates come down sooner? Interested to start a conversation here. And as I watch the comments roll in, I wanted to remind you all that if you have a variable rate mortgage today and the Bank of Canada has not increased interest rates, let you know if you're just joining me now, Bank of Canada has not increased interest rates. Interest rates are remaining the same. And all of a sudden, the 5-year bond yield is reflecting that. As of the interest rate announcement just seconds ago, we have seen the bond yield go from 4.25% down to 4.2%. It's back up slightly. However, it's interesting how fast the market reacts to these interest rate announcements. All right, so with interest rates staying the same today, that means that if you have a variable rate mortgage, you will not see any change with your variable rate mortgage. That may be hard to swallow, but maybe you were hoping for a rate decrease today and for your mortgage payments to go down. Well, unfortunately, that is not going to happen, and it's not in the cards today. Rates did not go up, means mortgage payments will not go up. If you have a line of credit, if it's either unsecured or secured, typically those rates are variable. And if you have a variable rate line of credit, which virtually 100% of them are, you're going to see your minimum payments stay the same and will not change. Bank of Canada has not increased interest rates. If you're just joining me now, they kept rates the same today. Prime rate's going to stay at 7.2%. Mortgage payments on variable rate mortgages will not change. Amortization periods where they are at now on those variable rate, on the fixed payment variable rate mortgages will not change as well. And line of credit payments will not change. If you have a variable rate car loan or a variable rate credit card, those terms and conditions and payments and interest rates will not change as well. Now, if we look forward to next interest rate announcement, when is that happening? The next interest rate announcement will occur on December the 6th at 2023 at 10 a.m. So we'll see the next rate announcement. That will be the 8th rate announcement for 2023. That will occur on December the 6th at 10 a.m. on Wednesday. And I'll make sure to have my pet mascot interest rate here join us on that final and last interest rate announcement for 2023 here on Canadian Mortgage Weekly. She's been a great addition to this channel. As we've spoken about earlier in this episode, she has correctly guessed 4 out of 5 rate announcements in the last 5 rate announcements. So her batting average now is 800. So stoked about that. Interest rate, you're doing a great job. And as I mentioned, she was going to predict it by either if she didn't eat the lettuce or if she didn't eat the hay, rates were staying the same. If she ate the lettuce, rates were going up. If she ate the hay, rates were going down. And as for where she is at right now, she is eating lettuce, but that happened after the rate announcement, so she was good to go. So good job, interest rate. Pretty excited about how that's all going. And with today's interest rate announcement, if you have any questions, my name is Joe Bladdock. I'm a mortgage broker based in Ontario, specifically in the Barrie Aurelia area. I'm licensed all across Ontario and can help you with your mortgage. And if you have any questions about your specific variable rate mortgage, what you should do about it, or if you want to get your payments lower because these variable rate payments have gone up so drastically and need to figure something out, please reach out to either myself or your mortgage professional, and we can look at lowering your mortgage payments further. It's a really great time to do that because you don't know how long these interest rates will stay high for. And if you're in a variable rate mortgage, locking in will save you a little bit, but what if rates go down in the next 2, 3, 4 years? You're going to be stuck in a high rate mortgage if rates go down. Now, that is a bet, and it's a very risky bet. You really need to take a look at your specific home ownership goals and to see where you're standing at with all of that. Because if you take the wrong mortgage product, it can also cost you thousands down the road. And when you take the wrong mortgage product, like I learned way back in the day when I took my first mortgage product from a bank, is you can have a penalty sometimes, even though the bank knows what you want it to do, of over $10,000. Crazy, crazy things to really consider when that happens. So with that, I wanted just to see one more time if you have any questions. Okay, will my mortgage payments change without, okay. Mortgage payments are not changing, everyone. Prime rate staying at 7.2%. And with prime rate staying at 7.2%, we will not see any changes. So it's great news today here on Canadian Mortgage Weekly. Join me on my next episode of Canadian Mortgage Weekly, which will be probably tomorrow on Thursday. I did take a few weeks off there while I was doing my private mortgage course, and I did find out that I did pass my private mortgage course. This private mortgage course brings my license for mortgages from a level 1 to a level 2. And level 2 mortgage brokers are the highest license level you can obtain now in Ontario. So if you are dealing with a mortgage professional, albeit it's they are with a bank or with a brokerage or wherever they are at, mortgage agents, level 2 is the highest agent license, and mortgage broker, level 2 is the highest broker license. And you want to make sure you're dealing with the appropriate folks for your mortgage. So thanks for watching today, everyone. We'll see you next time here on Canadian Mortgage Weekly, and looking forward to sharing some more information on the next episode.